What's up, guys? I'm Nobody Special. And the situation in European power markets is getting worse daily at this point, with the Russians choking off virtually all flow through the pipelines, French nuclear shutdowns, the wind isn't blowing, Europe is getting squeezed from all sides right now. And it's not just affecting European power markets. This could be affecting food security for the whole world starting next year and the year after. And I'm not just talking about emerging markets, third world economies. I'm talking about global food security may be at risk because of what's going on in European power markets. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And natural gas and electricity prices in Europe have gone absolutely parabolic, and the trend doesn't show any signs of slowing right now. And this is having major implications for the food and energy security of virtually everybody in the world, not just third world countries. We're talking developed economies could be at risk here. Now, before we get into some of the numbers, folks, I have to ask, could you please like this video, subscribe to my channel, and don't forget that notification bell. It really helps me out, and I'd be forever in your debt. And now it is that time to shrink my big fat melon of a head and get into some of these articles. And this is in oilprice.com. Europe faces full-blown energy crisis as gas prices smash all records. And this is dated yesterday. Prices have risen again today. A shortage of natural gas, nuclear outages, declining wind power output, and cold weather boosted power prices in Europe this week. The price at the Dutch TTF hub soared some 10% to 165 euros per megawatt hour. France's EDF has restarted fuel-burning generators as it halted 4 nuclear generators. Europe's energy crisis got even worse on Tuesday as a shortage of natural gas, nuclear outages, declining wind power output, and cold weather boosted prices. European gas prices hit a record high, and take a look at this chart. And look, it has gone so high that we need to even shrink my melon further. This is European natural gas futures, absolutely vertical right now, even well above that October spike that we had seen that had come back down to earth and now straight back up. The situation in Europe is getting very serious, folks. You need to remember, this is natural gas. Natural gas is not just used for electric. Natural gas is used for home heating, and natural gas is the main input to fertilizer, which is needed to feed the world. And this is going to be a major contributor to global food prices next year. More on that in a minute. Now, for some context, European natural gas is trading at an oil barrel equivalent price of $340. And I just want to show you this chart. This is showing EU and UK natural gas prices in oil barrel equivalents. And again, absolutely vertical. They've gone parabolic. This big spike in October is now a distant memory. We have gone well above that. And I would also point out, look at US natural gas prices down here in barrels of oil equivalent. Still relatively tame. We'll circle back to that in a minute. I've been talking an awful lot about ticker symbol LNG, Schneider Energy, as a way to harvest the arbitrage, the difference in the prices between the two markets. Again, not a financial advisor, not financial advice. Do your own research and your own DD. But reading on, compared to U.S. natural gas, which is traded in an arbitrageable range for 15 years, things are out of control. And this is the Netherlands natural gas forward month contract. Again, absolutely vertical. And this is showing a price going all the way back to 2008, folks. And we're looking at a 500% increase versus the previous highs seen around 2013. I mean, we were trading for most of the previous decade in this range of what, $5 to $10, and now here we are at $52.90. And all of this as gas flows into Europe plummet. We saw this chart earlier in the week. This is natural gas flows through Germany's main hub from the Russian pipelines sitting flatlined at zero. And I even saw articles yesterday that said some of the flows had reversed and gas was actually being drawn back into Russia. That's interesting. Russia's Gazprom has steadily reduced gas flows to Europe as the controversial Nord Stream 2 pipeline had its certification delayed until possibly July. No new flows into Europe are forcing utilities to drain their gas storages. Already at seasonal lows, some utilities have had to restart fossil fuel generators to avoid grid disruption. Now, I want to show you this chart. We'll take a minute to get a good look at this chart. This is showing natural gas inventories across several years. Okay, now this isn't a natural gas year, which starts in October and ends in September. Okay, so think of the beginning of the year. The beginning of the home heating season is in the month of October. So we're seeing the green line 2018, the yellow line 2019, the blue line 2020, and here we are in the purple line this year, 2021. Now, we're only in December, so the season is just now getting started, but you see we are well below where we've been in previous years as far as the amount of natural gas that is being stored in underground tanks in Europe. They are already drawing down these reserves, and with less flows or no flow coming in from Russia right now, it means they're going to drain down these reserves a lot faster than they have in previous years. And if you look at this dotted line, these are projections, okay? This is where we're guessing it goes. And projections are really rarely worth the ink that they're printed with, because the weather could turn colder or the supply disruptions could develop further. Who knows? Any number of things could happen that could change the projections upward or downward. But what I want to draw your attention to is where this chart bottoms out projected in April. Now, this purple line here, you'll notice it splits right around March. The dashed light blue line, that is if Nord Stream 2 pipeline comes into service. And we did a video a few weeks ago about how the Germans had delayed the approval of that for some technicality reason, which is really just having to do with the Greens taking over in Germany and some of the political back and forth between the Russians and NATO over Ukrainian situation. But let's assume nothing changes on Nord Stream 2. Look at where this purple line bottoms out projected in April. Folks, that is very close to zero, which means Europe could conceivably run out of natural gas. I'm not talking about prices go higher. I'm not talking about reserves get lower. I'm talking about running out, no gas available. That is possible. And to my knowledge, this has never happened in a developed economy where they absolutely ran out of gas. And what you're going to see, if this chart comes to fruition, if we get this close to zero, you're going to see these prices continue to rise, because the solution to shortages is higher prices. So they will have to raise these prices to try to destroy some of the demand to hopefully stave off economic disaster of ever reaching this zero line. And that would be an absolute economic disaster. Not that sky-high energy prices is really a good thing for the economy, but no energy availability, that is not measured in dollars, folks. That is measured in casualties, human casualties. So let us hope we never get anywhere near that zero line. So the situation in the European energy markets really cannot be overstated right now, folks. They are in very dire straits in Europe right now. I don't know what is going on among policymakers in that continent and really here in the States, but folks, we need to start taking energy security seriously. This is not about pie in the sky, unicorns and rainbows, and what our view of an ideal world looks like. This is about keeping people from freezing to death in February. Okay, this is a very big deal. And the other thing, forget freezing to death in February. We need to keep people from starving to death in 2022 and 2023, which brings me to the next point, and we've talked about this on this channel a lot lately, and that is the fertilizer market. This is next year's crisis starting already. And this is right now off of progressivefarmer.com, DTN fertilizer trends. And if you can see here, here is this chart of fertilizer prices and what they have been doing for the last few months. And while the chart has leveled off somewhat, we are still heading higher, making new all-time highs in fertilizer prices week after week after week. The purple line being 2019 fertilizer prices, the green line being 2022. And look at this red line, the average fertilizer price approaching $900, where the previous high was around $400. I mean, folks, this is next year's food getting more expensive at an alarming rate. And I just want to read you a couple of these numbers here. Retail fertilizer prices continued to rise the second week of December 2021. All right, so this is week-old data. This does not reflect the last few days of price moves in energy over in Europe, which will likely add to fertilizer shortages, as European fertilizer plants can't afford to produce fertilizer with natural gas and power prices being so high. There are signs, however, that the climb may be slowing somewhat. Only 3 of the 8 major fertilizers showed a significant move higher, and DTN designates a substantial move higher as anything 5% or more in a week. Okay, this is not year-over-year numbers here. This is weekly numbers. So 3 of the 8 major fertilizers rose more than 5% for the week. And this is the first time since the 3rd week of September that fewer than 5 fertilizers were appreciably more expensive. Anhydrous led the way, up 16% from a month higher. The nitrogen fertilizer's average price was $1,420 a ton, which continues to be at its all-time high in the database. And that database goes back to November of 2008. 1034.0 was 7% more expensive at $790 a ton, and urea was 5% more expensive at $901 a ton. All of these all-time highs. The remaining 5 fertilizers had just slight price increases compared to the prior month, but again, all-time highs, all of them. So fertilizer prices continue to rise, although they are rising somewhat slower now. Still, this is week-old data, and this chart may be about to steepen again as the European power prices are still headed higher at an alarming rate. Now, if you've been following my channel for a while, you've probably heard me talk about corn and how I think this fertilizer market in particular is going to hit the corn market, because corn is one of the most fertilizer-intensive crops in the entire market. Corn cannot extract nitrogen from the air. It gets all of its nitrogen from the soil, which means it is much more expensive in terms of fertilizer to grow corn, and that these alarming trends in fertilizer prices could result in less corn growth next year via either less corn acres planted as farmers switch to cheaper crops, or the farmers who do plant corn are tempted to use less fertilizer to try to save money. And I saw this article today in S&P Global Platts that shows exactly that may be happening. Commodities 2022, this is dated today. U.S. soybean supply is set to soar on higher acreage. High fertilizer prices likely to transfer acreage from corn to soybeans. Reading from the article, the U.S. soybean supply in marketing year 22 and 23 is set to soar amid higher acreage transfer from fertilizer-intensive corn crop. With fertilizer price indexes hitting record highs, the input cost pressure on fertilizer-intensive corn planting will be markedly higher than soybeans in 2022. As a result, there could be a notable shift in planting decisions in favor of soybeans when the next planting window opens in May. The current uptick in fertilizer prices is likely to continue in 2022, as easing restrictions are likely to sustain global economic recovery and boost oil and natural gas prices. Natural gas is a key input in the production of nitrogen-based fertilizers, and since corn is a fertilizer-intensive crop, its returns on planting are expected to be hit hardest in 2022. As fertilizer costs account for 40% of the operating costs for the U.S. corn farmers every year, it's expected that a sizable number of U.S. farmers might opt for soybean planting instead of bearing the high operating costs of corn planting. The higher fertilizer prices will see farmers switching corn crops to soybeans, which naturally nitrogenate the soil, leading to lesser corn acres planted in 2022, S&P Global Platts Analytics had said earlier. The soybean harvested area is forecast at 36.1 million hectares, up 1.2 million hectares year on year, while the corn acreage forecast was trimmed by 1.2 million hectares to 33.2. So exactly what we've been saying for a couple of months here. They are saying not all farmers, but a significant percentage of farmers may opt to save money on fertilizer costs by switching over from corn to soybeans to save that fertilizer. And they're talking about a 1.2 million hectare shift in the United States. That will be a big enough change to affect the supply of corn and drive that price higher. Now, there's another disturbing trend that I see starting to develop right now, and that is the breakdown of globalism and hoarding by the have countries who export food to the have-nots. Now, I have seen 2 stories in just the last week to that effect. And here's one I talked about a few days ago in my video, with Argentina set to limit corn and wheat exports. In an effort to prevent domestic grain shortages and to put a cap on rising food prices, the Argentinian government on December 17th announced that it would place a quota on exported corn and wheat in the 2021 and 2022 marketing year. Now, keep in mind, Argentina is the world's 4th largest corn producer. All right, so combine that with Americans possibly growing less corn, with a dry growing season in Brazil that could possibly lower corn production, with the possibility of war in the Ukraine interrupting farm production, and now Argentina putting caps on exports to try to keep their domestic food prices lower in the face of inflation. Folks, we're looking at a much tighter food market next year. It's already developing, and these fertilizer prices haven't even affected the farmers yet. This is just people making adjustments to their exports and their planting plans for next year. And then we saw this one just today, and this is Ukraine considering milling wheat export curbs in the first half of 2022. This is dated today. Major global grain producer Ukraine will consider limiting milling wheat export in the first half of 2022, with officials expected to decide on the issue in mid-January. Government officials are concerned strong exports will raise domestic prices for high-quality bread-making wheat, making the staple more expensive at a time when Ukraine's inflation is close to 2018 highs. So what's going on in these European power markets right now is a very big deal. First of all, Europe's energy security is at risk right now. And if they lose power in the middle of winter, we saw what that looks like in Texas here in the States last year. Imagine an entire continent having that problem. That's a very big deal, folks. And even if Europeans make it through the winter, what's happening right now with power prices and the effect on the fertilizer market means food security next year is at risk big time. And we're already seeing food exporting countries are starting to limit their exports because of inflation problems and anticipated food price hikes because of this fertilizer problem. You're starting to see the haves are hoarding the food, and the have-nots will be left to fend for themselves. That's a very big deal, folks, because that means for people like us here in the States or possibly in Europe, food gets a little more expensive. In other parts of the world, that could be the difference between survival or not. Now, again, I just want to reiterate, there have been two ways that I'm investing this trend. And first of all, I have to see YMIA and say I'm not a financial advisor. This isn't financial advice. Do your own research, your own DD, arrive at a decision that's right for you. But I have been trading this corn ETF that invests in corn futures. And you can see a few weeks ago, I drew this pennant pattern, and we have broken out of that pennant pattern, and we have held well above our 50-day moving average. We look poised to head higher. So I am still happy with this trade, and I think this one has a long way to go, especially considering the dynamics in the fertilizer market and the possible changes to crop yields next year. I think market prices for CM agains are heading higher and higher and higher for the foreseeable future. The other way I'm trading this trend with the European power markets is ticker symbol LNG, Schneider Energy. And again, I had drawn this pennant pattern a few weeks ago. We did break below this pennant pattern after the news about Schneider delaying the final investment decision on one of its liquefaction expansion projects. We have since recovered and are back into that pennant pattern right now. And with these European prices going parabolic while American prices stay the same, I think the earnings from Schneider are just going to blow the expectations out of the water in the coming quarters. I think this one has a lot more room to run. Again, not a financial advisor. This is not financial advice. I want you to do your own research, your own DD, arrive at a decision that's right for you based on your unique situation. And if you see something that you think I'm missing, please let me know in the comments, folks. I always welcome your feedback on these. So long story short, the situation in Europe is getting worse by the day. This is very serious, both in the short term for the European people and what it means on getting through this cold winter. And this also will have medium and long-term implications for food security, as these power prices are affecting fertilizer production globally right now. And that means farmers are being forced to make tough decisions that could lower crop yields and drive food prices much higher next year and the year after that. And we've already got a big inflation problem going on in this world. We don't need food shortages on top of all that. Folks, I want to thank you for your time. Thank you for watching this video. Don't forget to hit that like button, subscribe to my channel, hit that notification bell. It really helps me out. Till next time, live small and dream big.